There's a lot of important data that you need to be aware of. The Fed is going to cut interest rates, and that could spell upwards or downwards momentum for the market. I'll also take you through some very important things that you need to know. But before we get going, let's just do some quick housekeeping. I would like to thank Shah and Al for their very kind partial masterclass scholarship. If you would like to learn how the markets work, your name could be here. You just have to pop this form in, and the link is in the description of this video. The Profiting from CTKS Method structure is coming out on the 9th of October. If you're inside the masterclass, you're an active or current member of the service. If you've done level 1 and level 2 standard certification, you'll receive this absolutely free of charge, and that is quite a good saving. It will be on ctksmethod.org, but you must fill out this form, and you must do so before the 9th of October 2024. Or else this very special price will disappear, and disappear forever. There's some vital information that you must know, and also some very important levels that I need to take you through. Let's run the numbers. In around 24 hours, the Fed will meet to lower the federal funds rate. Will they lower by 50 basis points or 25 basis points? According to the Wall Street Journal, that is in doubt. Since 2022, we've had the fastest increase in interest rates so far. And when you compare it to 2004, 2015, 1999, 1988 and 1994, this is a standout for all the wrong reasons. The Fed has certainly kept interest rates higher for longer, and the only other time that actually has exceeded this one is from June 2006 to September 2007. The thing to understand, when the Fed cuts interest rates, the era of earning 5% returns on your cash is ending. You're going to have to put that money to work, but where? The answer we'll look at in this video, but just be aware, the Fed is likely to front load interest rate decreases. What does that mean? It means they're likely to do bigger interest rate decreases and then taper off to smaller ones. Typically, as the dollar goes lower, the share market goes higher. And of course, if shares are going higher, guess what else is going higher? Commodities are going higher, crypto is going higher, and so many other things as well. A greater than 25 basis point decrease in the federal funds rate, especially the 50 basis point decrease, will drag the US dollar currency index down. That will also drag yields down and bond prices up. This is typically seen as risk-on sentiment inside the stock market and the crypto market, as well as the commodity markets. But just bear in mind, the reason that they're cutting interest rates so wildly is because they've broken something. That means we can expect a degree of volatility to enter the market. Everything now hinges on the concept of a soft landing. If the economy or the economic system, of course globally, is reasonably strong, that would mean that a decrease in the federal funds rate is not a real problem. But if we see retail data coming in weaker than anticipated, and consumer or consumption expenditure from consumers is a major component of GDP. And what is a recession? It's 2 negative quarters of GDP growth, so this actually matters. If the US economy dodges a recession, that is a really good thing. And of course, we're in the presidential election year, so we don't think that politicians will want to see the stock market absolutely crater. That's not good chances for re-election if that happens. Typically, 1 year after the first federal funds rate cut, the markets have been positive 5 out of 7 times, so just bear that in mind. As a data-driven community, we just look at the facts and look at the source. There's a 67% probability that just in under 24 hours, there will be a 50 basis point decrease in the federal funds rate. Only a 33% probability that there will be a 25 basis point decrease. Expect incoming volatility. We could get a bit of a spike up and then a spike down, so just please be aware. Don't forget, in an election year, politicians have a vested interest to themselves, their greatest party supporters, to actually not destroy the economic system. They'll just wait until the elections have passed to do that. Unfortunately, a lot of people think that the main market is not impacting the crypto market. But look at this, Bitcoin poised for volatility ahead of the US interest rate decision. Of course it is. You can see there's so much institutional and country adoption inside the crypto market. Crypto is here to stay. Unfortunately, a lot of stock market investors were told, oh, don't go anywhere near crypto. The institutions want to buy it first and then they'll say it's safe. Well, they now say it's safe, so you can get in after all of the action has already occurred. It's just a fact of life. The institutions are not your friends, so just be aware of that. You must develop an independent nature when it comes to your own financial security. Many crypto traders and investors don't look at the stock market. This is a really big mistake. The stock market sets investor and trader sentiment. It's very important to know what the stock market is doing. For students and service members, I think it's really important you keep your eye on the Russell 2000. You can see the Russell 2000, as it moves, this blue line is very associated with it at the current time. That blue line is crypto. Crypto is literally the canary in the coal mine. If Bitcoin is going down, what are we expecting to occur inside the stock market? Well, we're expecting retracements. If it's coming up, what do we expect inside the main markets? We expect them to turn around and go for it. What does that mean? If you're a stock market investor and you don't look at crypto, look simply at crypto as a risk-on or risk-off indicator. It's a fantastic measurement of risk sentiment inside all markets. But if you're inside crypto, keep your eye on the Russell 2000. It's throwing a pretty damn good signal at the current time that we are at least in the process of going higher. If we see the Russell 2000 starting to wobble around, starting to violate lower levels of structural support and come down, just make sure that you're trading and investing with that in mind. But so far, the momentum is to the upside. And you can see that's also being reflected inside the Dow, inside the Nasdaq, and inside the S&P 500. This is why it's so critical to look at the charts. Why? Because the newspapers, they'll tell you a story. That's how they make their money. But the charts have nothing to sell. They just want to tell you what the truth is. We're in a really interesting position right now. You can see this high and this high and this high. You're seeing a downtrend currently at the current time. What about this trend? Oh, it's starting to strengthen up a little bit. Could this mean that we could come up to around that 64,000, just wobble around and start to break upwards? Or are we anticipating a movement back to around that 54,000 before either coming up or underside retesting and breaking down? Please let me know your thoughts inside the comments. It's very important to have your up case and also your down case. The majority of investors and traders just say price must go where I want it to go. Well, price doesn't work that way, unfortunately. It will just go any way that it wishes to go. Our job as professionals is just to read the market and see what could actually unfold. And to do that, we must look at structure. Inside financial markets, everything is governed by structural resistance and structural support levels. You can see that we came up into structural resistance at that 60,652. We came through this area of once support, but turned into resistance when we bypass the 63.05 level. We can see that this structural level at 59,999 held price for quite a while, and this negative fair value gap just got filled. And we saw that we came into an absolute barrage of structural support levels, and quite a particularly strong one at 57,911. Now, as that occurred, what did price do? It's been retracing. And what's causing price to retrace at the current time? Just keep your eyes on the major indices. That's why I showed you the Russell. One thing to realize, as we've gotten over this 58,909 level, we could come in and test this as structural support. It is a structural once resistance level. The jury's out if it's a structural support level just yet. We need to see how it interacts with price. Does it rally off it, or does it cut through it? If it rallies off it, we would expect a target price of 59,999, and that could happen very, very quickly, and it would catch literally everybody off guard, but not us, because we understand the three-way nature of price. It's a multi-dimensional thing. It could go up, it could consolidate, or it could come down. And in fact, it does all three things. You can see it came up, it came down, it was consolidating, and then it went up, and then it came down. You get the idea. So when people say something like this, it could go up, it could go sideways, or it could go down. This is the actual reality of price. But where does it come down to, and why does it fall so quickly through specified areas? It's all to do with structural support and structural resistance. If we have enough structural support levels, and we had a barrage of them, you tend to get a reflection in price, and that's what we're seeing currently. Of course, it is a very volatile time, and a huge degree of people are very afraid of the market at the current time. But just bear in mind, structure does tell you everything.